Hi, Dave Jackley here with another edition of Exactly at Home north of Pittsburgh. And today I have the pleasure of speaking with Amber Housholder of Guaranteed Rate Affinity, a correspondent mortgage lender, which we're going to find out about in a second, and all the things you need to know about borrowing money to buy your house. Okay, Amber, first thing, what is the difference of a correspondent lender from other kinds of lenders that people could go to?
A correspondent lender is bigger than a broker. So we do everything ourselves. We do our underwriting ourselves, our closing, our funding. So everything is done under Guaranteed Rate Affinity's umbrella. And then, once a customer closes, the possibility then of them being sold to an outside investor typically happens a couple of months after closing, versus if you're going with a broker who's smaller, they're lining you up with that third-party lender right away. That's where your mortgage is being sold and you're servicing. So that's sort of the difference, and it enables us to work with the larger banks across the country.
So, the funds come from lots of sources, but is this where Fannie Mae and those kind of people come in?
Yeah, Fannie, Freddie, Ginnie, those are our biggest investors. So we align ourselves with their underwriting guidelines, and most large entities follow along behind them. So if you're underwriting for Fannie or Freddie, you're lining up with just about everyone else in the marketplace.
Interesting. Now, they used to be government-backed, but are they independent agencies now, or how does that work?
They're independent agencies. They had some support during the pandemic to keep everything moving along, but now slowly that support's being taken away, which is sort of what's, happening in the economy right now, and also kind of bringing mortgage rates to be a little bit higher than they had been.
Interesting. So I think the people watching are going to be very interested in your programs, your products, your processes. But I got to ask you one question before we get into that. People are in a panic out there about rates going up. What would you say to a person that's facing that, and now's their time to buy a house?
You're dating the rate. You're not marrying it. You're getting an interest rate now, and it could be something that in the future there's something better, so you can move along to a different rate with refinancing. If the rates don't come down in the time frame that you're interested in, then basically you've got the best thing going. So, you're not stuck in it forever. Yes, there's a cost to refinancing, but you can balance that with how much you're going to save in the interest rate. So it would become a discussion to have to make sure it's a good move for you. But if now's your time to buy a house, historically rates are low. They're just not low compared to where we've come from. Interesting.
So if I paid on my mortgage for a while and I've knocked the principal down, or if my late uncle leaves me a chunk of change and I can apply that to the house, can I both refinance and recast the loan out to lower my monthly payments at that point in time?
Yes, but those are two separate things. So when you're refinancing, you're getting a whole new mortgage loan. So you're going through the process all over again. You're incurring the same expenses. You don't incur transfer stamps on a refinance because you already own it, but title insurance, getting another appraisal, going through employment verifications, things like that. Versus recasting, and most investors do have recasting, but not 100%. There's usually a small fee, like a few $100s. But the nice thing about recasting is they'll take a lump sum of money, usually $10,000 or more, and they will apply it towards your principal, and they will reduce your monthly payment. So you're not changing your interest rate, you're not incurring all the closing costs, but you are making your monthly payment lower. And that's the difference between the recast, or they also call it reamortization, versus a refi. And, again, recasting you can't have any mortgage lates. You have to have made like 6 months of payments before they'll let you go ahead and do that. And usually they don't have a limit. You can do it more than once.
So there you go. That's why you need Amber. You have questions like that, you got to ask her. Okay, well, tell me, how'd you get into this business? How long you been into it? What do you like about it?
It's funny. I think it's funny. I took real estate as an elective course in college and just loved it. And so I have a degree in real estate and finance. So I started out working more along the lines of relocation. And, at that time, many moons ago, it was developing websites and having some online presence. And then the opportunity became available for working in the company's mortgage company. So I think it's more than 20 years ago I started doing that, and
wow.
that's the course.
So you got the experience. What do you like most about what you do?
I just like when getting people to close. I enjoy meeting and talking with people and getting them pre-approved, but whenever I'm making the calls or contacts, like, everything's good. This is your final number. You're going to closing. Just the excitement, and it's a trek. It's a journey. I feel like I'm the guide, and when you make it to the end, it's fun. It's happy.
Yeah.
It's
and
good.
People like me need people like you.
Yeah.
Yeah, it's a great thing when you can help people get through the front door, so to speak. Well, I know you've got some unique programs with your company to get people, like we say, through the door or through closing. Do you want to talk about any of those?
Sure. I think with our investors, we have virtually all the programs you would need to buy a property that's a single family up to a 4-unit. I don't have a lot loan. I don't do commercial loans, but if there's any type of FHA, VA, first-time home buyers, jumbo loans, regular 5% down loans, Fannie products, Freddie products that help with down payment and closing cost assistance. So it's sort of soup to nuts. There's also renovation loans. So if you find a house that's a little rough and with some TLC, it could be like your dream home. We have those products as well. So to enhance some of those things, there's ways to work on getting that information during the pre-approval process for each customer.
Terrific. Yeah, well, here we are in the middle of 2022. The severe seller's market might be fading a little bit, but it's still very competitive to buy a house. And I know you've got a PowerBid product. So how does that help a buyer that's gone through your process be more competitive at when they bid on a house?
So this marketplace has made offers, like several offers coming in for the same house at the same time. And if someone has cash, it's viewed as, that's the way to go. So if someone does need financing, the question is, how far along can we take them in the process so that they're as good as cash? So PowerBid is designed to collect all the customers' documents, like pay stubs, bank statements, W-2s, have them sign disclosures, and actually have their file reviewed by an underwriter so that we know they're approved. They have a commitment letter, and all they need to do is find the house. So specifically, the house, once they find it, we would need to do would be an appraisal and then the title work. And then as long as all that is okay, then we know we have everything put together. So it takes them, a couple steps closer in the mortgage process than someone who is just pre-approved. That, so you're putting yourself ahead of the people who are pre-approved and right up against the people who are cash buyers.
Interesting. Wow, and I can see where that would be a great advantage for buyers. And the other thing, people, if they worry about rates going up higher, about locking in a rate, how can they lock in rates?
A couple of options. Usually, traditionally, when you find the house, you lock your interest rate because the house purchase is based on, a certain date in the future to close. So you have to make sure that your interest rate covers you to your closing date. During this, year 2022, we have what's called lock and roll. So this is a program where you can lock an interest rate for up to 90 days while you're shopping for a house. So if you think rates right now are low, you could enter into the lock and roll program and then, shop for your house the next 30, 45 days. And then you have 30, 45 days to close, and you have that interest rate of today. And the great thing about it is there's a one-time float down. So if rates keep going up, then you're golden because you have the lowest rate. But if rates actually do dip down after you found your house, you can do a one-time float down into a lower interest rate. So you've kind of got the best of both worlds.
Yeah, that's terrific.
You're not losing out.
Well, is there anything else right now that people need to know?
I've had a lot of questions about, working with people that don't have like a full down payment. So there are some programs that are much like FHA, but they're conventional. So the Fannie and Freddie each have their own. Actually, Freddie has two. So there are 3% down conventional programs, and you can ask for seller's assist to help offset some of your closing costs. And just in this marketplace, being in Southern Butler County, there are USDA loans, which are zero money down. You have to qualify income-wise and location-wise, but it does help because you can also ask for seller's assist, so it makes the cash to close as low as possible.
So full down is usually what, 10 or 20%?
So down payments less than 20% can be as low as 3. So 3% down to 20% down, you have mortgage insurance.
Right.
And once you go over 20% down, then you don't have mortgage insurance anymore. And on conventional loans, once you hit 20% down, the mortgage insurance drops from the mortgage payment, so your payment would actually get a little bit lower.
Terrific. Well, I want to thank you for spending the time with me. There's a lot of information here, and Amber has more information than that. And I can tell you from working with her that she answers the phone all the time, and even on Saturdays when you're trying to buy that house. And hey, if you don't have money in the bank, there's lower down payment programs. So tune in again next time for another edition of Exactly at Home, north of Pittsburgh.